All right, welcome everyone. Welcome to the Hurley Investments Market View Commentary for September the 5th, Tuesday, day after Labor Day. Glad to have you guys with us. Yes, I will be doing this Thursday's trade findings and adjustments. Keeve is gone on vacation. And tonight, I think this is going to be a rather quick one, unless you guys have quite a few questions. But other than that, we're off on a day. We've got small numbers here today, and we'll just try to go through the best we can. A couple of you were saying today, hey, we have $1,137 of profit. We need to take that profit. And I thought we could, but I want to go over some positions and what they are. That top position that says Meta, and that's all really big. Let's kind of make this a little bit more realistic. Let's do like a 14. Let's not bold it. So get that back out of the way. Okay, so the Meta 17 January 25 240 long call means on January 17th, 2025, we have the right to buy Meta at $240. This is our profit side of the equation. It is up. Right now, it's up $1,137.73. But we have another side of the trade. And this was our protection side of the trade. We also have a Meta 17 January 25 300. And you'll notice this one is a negative, and this one is down $819.78. So what is this one? This one means it's actually called a short call. Means on January 17, 2025, we are obligated to sell Meta at $300. So, thought behind the trade. Buy at 240, sell at 300, and make $60 per contract. We have one contract for most people, so that's 100 shares, which would equal to a $6,000 profit. Cost. For our cost basis to see what our cost was, we have to take these two and subtract them. It cost us, and I'm getting a calculator ready here. It cost us $8,657.22 to buy the position. We took a credit in of $5,590.22. The cost is equal to, and I should have done that. Cost is $86.57.22 minus 5,590.22, which equals 3,067. Net profit, $6,000 minus 3,067 equals $2,933. Profit right now. It's pretty simple. The profit right now, you just have to take your unrealized gains. Not too hard. We're up because we have a positive $1,137.78. We have a loss of $819.78. So if you want to know just where you're at today, 1137.78 minus 819.78. Right now we were up $318. Get the right thing there. $318, or our potential profits, 3,000. Excuse me, our potential profits 2,933 divided by 2,933, or 10.8% on the trade. Or another way to look at it is we're up 10.8% of our potential profit. So that is the trade. That is why right now we are not taking $1,137 of profit. That is not profitable for us. Yeah, we would have to take that short position off at the same time. We are profitable $318. In all honesty, we want to see this in the thousands range. We get Meta up to 350, and we'll be in that $1,000 range. And at that point, we'll probably take it off, or we'll try to roll the whole position up to make some more money on it. But that is our position on Meta for a lot of you, and that's why we don't have, that's why we haven't taken the profit just yet. So that's the short and the skinny. Couple questions. Does Meta have to trade over 300 before you be able to sell Meta at 300? So the short answer is we don't get to sell Meta. We're obligated to sell Meta. So someone on that other side, Russ, has to call us out, has to say, hey, I want to exercise my long call, which will trigger our short call, and which means we'll then exercise our long call and we'll make our maximum profit. So this is where we're at. I mean, in all honesty, if we see Meta go up to 400, we're going to duplicate another version of this and keep this one in place. And we'll just keep chasing it up, but we'll probably do it for a shorter time frame. We did it on Elite because Meta had fallen quite a bit on not so bad news. So we wanted to do the best we could to capture the opportunity to make some good money on it. But yes, anytime it trades above 300, someone could call us out. In which case, if they called us out, we're in the money, making money. We're a happy camper is the short answer there. We'd be a really happy camper. So someone also asked, Kevin, explain Disney. Well, I can't explain Disney. Disney has made some pretty poor choices. Companies are going to learn that mainstream America probably does not agree with some of the woke ideas that are out there, but we will see. That's the short answer. We will see. All right, give me a second. Our expectation is that we were looking at right here, 79.07. Intraday, it's closer to $80.40. We were a little shocked to see Disney up today. Our expectation is add a second set of long puts. And actually, Disney finished down 45 cents. So our comment is it's at 81.19. And there's not really a floor underneath Disney right now. So our expectation is we're going to see a little bounce just going off of the top, the RSI. We're seeing a little bounce. And then our expectation is we probably will see Disney go down to 72. Someone said 75. There's an article out today that 75 is the absolute buy-in price. Kramer's looking at 68. It's way oversold. And there's an article that came out. I think Bill showed it to me. There's an article that came out that really makes Disney look bad. But the person that wrote the article obviously hadn't done their research on the reasons why some of the problems were with their shows. I mean, most of the movies that are coming out right now were created during the COVID era. And let's face it, a lot of the COVID era movies weren't necessarily top notch. Some of the reasons that the individual has for things being down on Disney, again, he just hasn't put two and two together. It's rather unique, but the short answer is we're looking to double up on some puts, and we might write it down from 81 all the way down to 72 is where we have our buy-in, where we will double up on puts to make more on the way down than the stock loses. And that's what we're looking at in regards to Disney. Baidu today. Baidu held the 50-day, but just barely. The 50-day is at 142.18. We closed today at 142.60, but we did trigger out of the money 140 puts. Our expectation is that we'll probably see Baidu in this range. It'll probably fall below. Yes, it had a great Friday because it opened up its chat bot and 1 million users signed on to use it right away. The short answer is yes, it has some good news, but it's in a range right now. So we bought some cheap 140 October 13th puts, expecting Baidu to travel down to the S2 support level. I guess it's an S1 support level, 125.86. And that just fits in its range where it's been ranging back and forth. So yes, shares of Baidu today, it was purchased on nothing more than a technical analysis that, hey, it passed below and triggered 140 puts out of the money, a little bit cheap. We're trying to do the best we can to basically catch the breaking of the 50-day for the way down. Last time we came up here and we're overbought, I mean, it fell all the way down. It usually comes pretty close to it. So we're just following past trends and we're already prepared. So we have 7 past trends that say, hey, got to be smart, be getting some puts on, and we're running things accordingly. So that's where we're at on Baidu. I found it pretty interesting. Earnings dates 27th. I found it pretty interesting that it seems like more and more of the newsletters are telling us, hey, we've learned some bad news in the past week. String of less good news. We learned this past week the consumer confidence index dropped to 106.1 from 114. The JOLTS opening were down roughly $300,000. Reported jobs added on the ADP were 177. Real GDP growth was the second quarter 2.1 versus 2.4. The piece price index was up 3.3% year over year, and the core 4.2. I really wish they just used the core, right? To say the things they gotta buy, we shouldn't worry about. We shouldn't. It shouldn't be included in our inflation. It's like, you idiots. The things that we have to buy are what hurts us most with inflation, not the freebie money. 3-month moving average for non-farm payrolls was 150 versus 181. We've had really bad revisions. The revisions are awful. I'm going to show you a chart on that, where our job creation, for crying out loud, sucks. And the federal government better open up their eyes. As well, the Fed better open up their eyes, the FOMC. And the manufacturing index was actually getting better, 47.6 versus 46.4. The short answer is, and I kind of said it a week ago, don't be surprised that we're where we're at. What it all means, our data is getting weaker. We are on, quote unquote, a soft landing, but we're probably going to go through not a recession, but we will probably go through a quarter. Well, I guess it will be a recession, right? A quarter, if not 2, of negative GDP growth. It'll probably start the beginning of next year. And it'll be for 2 quarters, which will trigger the technical verbiage of a recession, and then we'll bounce back with the hope of the election. It'll be pretty interesting to see where we end up. But we probably are going to go through one more rate hike. I know they said the Fed would say we'll go through 2. My expectation is we're going to go through one more rate hike. With that said, what will markets end this week? Kind of surprised by last week. but I'm going to go with lower. Technically, the Dow Jones Industrial Average is still technically bearish. It's flat. We're breaking the 50-day. That gives me some concern. If we look on the S&P 500, we're testing the 50-day. We're actually technically bullish right now. It's amazing what 1 week does, right? Did I have that right up above? Yep. We're technically bullish. But if I was to ask you, currently we're trading at, we closed at 4496.8. If I was to ask you guys, I'm going to send a poll out your way. I want to know, where do you think we're going to be in September? Are we going to jump up to 4607? The highs of July, the highs of the last 6 months? Are we going to go down and test the 50-day and finish at 4472? Are we going to go down to the last month's support level of 4300? Are we going to go down to an S2 support level on the pivot points of 4226? Or are we going to go all the way down to the 200-day moving average at 4152? Right now we're trading at 4496. Where do you think we're going to end up? You should have a poll that opened up. Click on one of those numbers. Let's see where we end up. All right, hurry up and take a pick. I'm going to give you 10 more seconds. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. If you have your vote, put it in. I'm going to close it on up. So that's pretty interesting. Out of 8 people, 2 of you said 4607. We're going to go back and test the highs of July, the highs of the last 6 months. Whereas 6 of you, or 75% of you, said nope, we're going to go touch the 50-day. So basically, 8 of you, or 67% of you that are here with us today, believe that our market is going to go flat or higher for the September month, where the typical loss is like 2.3%. So you guys think we're going to buck the historical trend of our market in September? I find that interesting because my vote would have been 4,300. I would have said we could probably lose 3% for the month. It would not surprise me if we went and touched the 200-day and then bounced up to finish at 4,300. But that's just where I was looking at where we would be. And I find it interesting. We're a bunch of optimists here today. Bunch of optimists that, hey, this is where it's going to be, and off we go. All right. That's an interesting one for me. NASDAQ is now technically bullish. Amazing what a nice week and a day can do. Moved higher. For me, I still think that we're going to be at that 1.5. I really want to push this to 3. I just don't have the evidence to tell me I could do that just yet. All right. Earnings. Wednesday's GameStop, a meme stock. DocuSign on Thursday, Kroger on Friday. Really quiet week of earnings. Economic reports, factory orders tomorrow. The ISM non-manufacturing, which is the services, which should be expanding on Wednesday. We have initial continuing claims, productivity unit, labor costs on Thursday. Consumer credit's the big one on Friday. We did take some great profits on core holdings from puts, and we're getting ready to add some protection back on for September, paying special attention to the index, the S&P 500 dropping below the 50-day. I found an interesting article. Actually, I think I found this, and I think Bill Brander sent this to me as well. Hedge funds have made a push into risky assets. It's just something to take a look at, that hedge funds or funds in general are looking for yield. And fourth strongest surge in the SG chart. It's a multi-asset risk indicator. Fourth highest in the last, well, since 2005, right? Last 18 years. Fourth highest run for hedge funds into what they consider risky assets. Here's the article. Baidu's Ernie bot jumps to the top of Apple's as I'm seeing stuff I got to take off. Apple's App Store. So it was huge. This is what moved Baidu on Friday, why we had the big bounce in Baidu last week. Interesting article that came from me from one of you guys about 3% inflation target. Why the Fed doesn't make a good push to a 3% inflation target. The real reason is that they lose their credibility. But an interesting article on inflation. I think you guys should read it. And we have an IPO of ARM. Short answer is it's just a chip manufacturer that's going to IPO. Interesting article that Apple, Google, or Alphabet, right? Apple, Alphabet, NVIDIA are interested in buying up these ARM shares. They're going to go public on the NASDAQ. I'm not a fan of buying IPO shares the first 6 months. I am interested on seeing how this one does because it looks like it may buck the typical explanation, well, the typical quick buying and drop that you see in IPOs. So just pay attention to ARM. I'm not recommending that we buy it. It might be an interesting one to pay attention to. With that said, any questions? Any questions you guys have for me? Hopefully I did a good job of explaining positions that we're in and actively what we're doing on them, primarily for Disney, Baidu, and for Meta. A lot of people own shares of Meta, but we do have people in this this option strategy if we felt they couldn't afford the actual shares, 300 shares of Meta. So hopefully that did some good explaining of what you're seeing in your accounts. All right, any questions you guys have? If not, I appreciate you being here with me today. Kind of a shorter, well, let's face it, it's a shorter webinar because our market kind of stopped. We had big money out for a couple days, and it definitely did not buy in today. So, all right, hey, you guys have a wonderful evening. I will remember you guys on Thursday. We're looking for a trade, something we can get into that'll be an actual trade. I like our thought process on what I would do right now. So hopefully you guys will agree with it and we'll go from there. You guys have a good evening. Pleasure being with you tonight. Look forward to seeing you Thursday morning, 10 a.m. Mountain Standard Time. Have a good one. Bye-bye.